Hello, everyone. If you're here for the really sharp Macro Monday Insights, normally hosted by Scott Melker, you're in the right place. I am not Scott. My name is Noelle Acheson, friend of the show, and I'm filling in for Scott today, and we have a lot to talk about. But before we dive in, do please hit the subscribe button. And if you've already done that, right next to it is the like button. Please hit that too. Now, today, obviously, top of mind is going to be some of the macro data we've seen over the past week, which is showing that maybe there is some weakness seeping into the economy. This is on top of the talk of tariffs and the talk of layoffs and the talk of general uncertainty. I'm sure we'll get into that. Also, we do need to talk about meme coin fury, which seems to have reached a peak after the antics over the weekend from Argentina's President Milei and the Libra token. I'm sure we'll get into that as well. And all of this is feeding into the overall malaise in crypto at the moment. I know you've all talked about this often before, but it seems to be getting even bleaker if that was possible. Is that a bullish sign, or does that mean we're gearing up to head lower? With that, I am joined by the usual gang, Mike McGlone, Dave Weisberger, but we're missing James Lavish today. Instead, we are joined by Lawrence Lepard. Thank you all so much for joining us, and welcome, Lawrence. Anyways, I hope you all had a good long weekend. And I also want to thank everyone for being here on what is a US holiday. But as Mike was saying earlier, this isn't work. This is breakfast and this is fun. So thank you all for being here. Now, I want to, Mike, I want to hit to you first and get your take on the macro situation. I'm imagining you didn't have your normal Monday meeting at the Bloomberg team today, but I do want to get your take. But before that, Lawrence, I want to give you a chance to tell us about your book.
Oh, yeah. So I'll hold it up here. So I published a book called The Big Print, and it's just out. It came out about a week ago now. It's on Amazon in hard copy, paperback, and digital format. The audio will be out. Audible will be out in a couple of weeks. Central thesis of the book is the monetary system is broken, and we need to fix it. It talks about the history of the monetary system, talks about how to fix it, and then suggests ways that investors can protect themselves from the inflation, which I think is obviously has been bad, but I think it's actually going to get worse. I know a lot of people don't believe that, but I do. So that's the point of the book, and hope people like it.
Often things do need to get worse before they can get better, right? That's sort of one of my theses as well. And the topics that you mentioned are topics that we often discuss deeply on this show. So thank you for that. And I'm sure you're going to have many insights to share with us today as we get deeper into the crypto weeds. But first, let's do the macro look. I mean, Mike, we saw some pretty alarming figures last week. Retail sales came in way under expected. CPI was way above expected. Are you worried?
Oh, yeah. Well, you know my bias. We can make a good market, Lawrence, and I'm the opposite. I think our major risk is towards normal deflation historically that's followed the inflation. And retail sales last week has showed what I've been pointed out for almost 2 years now. Inflation adjusted retail sales are about the same as they were right before the financial crisis. They're hovering near zero, inflation adjusted. And if you overlay that with what's happening with the wealth competition, and I'm sorry, the wealth effect, we've created $12 billion of equity wealth last year, and retail sales are still not good. It's a bad tilt. And I want to share my screen to just show you the tilt in commodities. I can't see it. Just show me when you tell me when you got it up. And I'll start with the doctor of copper. Dr. Copper last week put in a pretty good peak. And that's just based on the shenanigans with risks in the US, potential tariffs. And we got data going back almost 30 years on the CME traded copper versus LME. CME is US-based, dollar-based copper peak last week at 848. I think
we have your screen up now if you want to go to the copper chart.
Mike, for what it's worth, we can't see a copper chart.
520 last year. And what I show you in this chart is the equivalent in LME copper. Okay,
your screen's up. We just
still no chart. It's not showing copper. We got your appointments.
I can pull it up. Let me see if I can. Anyways, I don't have a Bloomberg terminal, not like some of us, but.
All right, so we'll just forget the share screen. I'll just focus on what matters. Is the copper on the CME last week had a major spike, the biggest spike ever versus LME. Now that's going back 20 years. Every time the last time it was similar was last year it peaked. It's a sign of what's happening globally. The doctor is not doing well because you see what's happening in China. China's imploding. Just look at their bond yields, about 165 in the 10-year. It's 300 basis points or so below the rest of the U.S. You have England, UK tilting towards recession, the latest GDP data. Germany tilting towards recession, the latest GDP data. What are they facing? Severe tariffs from the US. And I would not underestimate an emboldened president. This is his second chance, his last chance. So I think that's the key focus we have to look at. And you can see that in commodities. Like I said, copper's tilting lower. The US 30-year bond yield maybe peaked around 5% this year at the same time that crude oil peaked around 80. Crude oil's tilting lower. And what's the stated goals of our new president? Lower yields, not really rates, lower yields, which is tilting that way. Lower energy prices, which is tilting that way. So from my standpoint, from a commodity standpoint, I see one commodity making record highs that matters, and that's gold. Lawrence is all over that. I expect that to continue. The key thing I think from the macro that's significant is this Bitcoin to gold ratio is tilting downward. The Bloomberg Galaxy Crypto Index, which is I helped create with Galaxy and our index team, is tilting downward. And I wanted to end with the key macro thing I think that a lot of Bitcoin people are missing. So that's the macro. The macro globally is tilting towards deflation worthy of the inflation. That's always happened in history. Lawrence can pick up on that unless you really print money. But the key thing I think that Bitcoin people are missing is what we just did with this re-election. The world changed on November 5th. Is I think people are missing that there's a big difference than innovation, creating companies that can create money and profits out of the innovation from tokenization and from cryptos and everything. And then there's the speculative excesses in prices. I think they're missing, could be bad for prices, as evidenced by 11.2 million cryptos listed on coinmarketcap.com. There's just too much supply in the space. Now, yes, I get Bitcoin is definable diminishing supply, but in terms of its competition, all the new ETFs now you're seeing are anything to do, or obviously all the other cryptos. So that's the way I look at it. In the macro for commodities, crude oil may be peaked, copper may be peaked, gold's the only one going higher. What stops that trajectory?
Well, much like among the commodities, there are many different narratives to all of crypto as well. Lawrence, dive in.
Well, no, I don't disagree with anything Mike has said. I don't follow crypto very much. I'm kind of Bitcoin only. And I think there's a lot of noise in crypto, and I think all crypto is, destined to trend lower versus Bitcoin over longer periods of time. Clearly, copper is getting soft and oil is getting soft, and the economy does appear to be going down a bit. I mean, we had some light retail sales numbers. I think you're starting to see airline traffic or gate passages at the TSA are trending slightly lower. It appears though the economy might be rolling over. I've got friends who are fund managers who watch the earnings reports and projections very carefully, and they say lots of companies are missing and guiding lower. So, it feels to me like the economy might be truly rolling into, the recession that we thought was going to happen last year and didn't. But we'll just have to see. Certainly the gold price doesn't reflect that. And I think what gold is telling us is that, the market for sound assets, I mean, people think we're in a sovereign debt crisis, and in my opinion, we are. And so, sound assets are well bid. And, Bitcoin's just been kind of chopping around between 96 or 95 and 105. And I think it'll ultimately break out and squirt up to 140. I think gold's on its way to 3,500, 4,000. And this is really because the government spending situation is just completely out of control. And in spite of what Doge is saying they can do, the markets know they can't really do it. I mean, they can certainly at the margin reduce some of the expenditures and some of the stupid stuff. But, when Elon came out and said he was going to take $2 trillion out of the deficit or out of spending, I mean, there's no way. It's just impossible. So, and the sound money alternatives, gold and Bitcoin, smell that.
And so assuming you're right, and it sounds plausible for sure, then that does mean markets, probably stock markets, are going to be heading lower. And this could be part of the short-term pain that Trump is starting to hint at, prepare us for. Does Bitcoin decouple entirely?
That's a great question. Yeah, I do believe stock markets will head lower. I mean, the stock markets in terms of valuations are just at unbelievable nosebleed record levels. If you look at any of John Hussman's data, I mean, we haven't seen this since 29. It's even worse than that. Yeah, Bitcoin decoupling, it's unclear. I mean, it's got a risk-on component to it, always has. It's been heavily correlated with the NASDAQ, although I've recently seen that correlation start to weaken. And I think ultimately it will decouple because, it benefits from Gresham's law, as does gold. And, it's when Well, a lot of it depends, Noelle, on the policy response and what the government decides to do. I mean, the point of my book is that they're going to be forced into printing money. And when they are forced into printing money, then, we're going to see what we saw in 2020 or what we saw in 2008, which is sound money assets are going to take off. And, but when that print occurs, who knows? And they're trying to figure out all kinds of stealth ways to print money, but not say they're printing it. I mean, they're talking about they're going to take the supplementary leverage ratio down to 0 so the banks can buy more bonds. There's a big Zero Hedge article this morning, Premium, that talks about how, they're talking about possibly revaluing the gold that they hold. They have 261.5 million ounces of gold theoretically in Fort Knox and Denver and West Point. Whether it's really there or not, a lot of us are somewhat skeptical, right, Dave?
Not to mention what's under Wall Street.
Yeah, but the theory is that if they marked it up, that would be an immediate credit to the
similar
account and really money.
Yeah.
So
I'm over in Europe, and already we're starting to freak out about the defense spending that's going to be needed given the new stance of the new and expected stance of the United States, and what's that going to do to money printing over here? Which is a reminder that this is not just a U.S. phenomenon, and crypto are not just U.S. assets. And Dave, what's your take on that?
Well, I mean, it's funny listening to Mike. The first 3/4 of everything he said, I agree with completely. I definitely am on board with what Lawrence is just saying, but I honestly, if you think about what are the macro things that have to happen for Bitcoin to have an explosive second half of the year, they're all happening. So think about what it is that we care about. What is Bitcoin? Verifiability. What have we seen over the last week in terms of massive news stories that are just getting started, that even if they don't turn out to be true, still they're going to scare people. And if they do turn out to be true, are massive. Number one, massive stories about the gold of the Bank of England might not be there, and calls for Doge to audit Fort Knox and the Federal Reserve banks, etc. And a story out of Australia saying the Bank of England, based on serial numbers, almost certainly has counterfeit gold bars. Well, when you compare Bitcoin to gold, what is one of its largest advantages? Bitcoin is 100% verifiable and easily verifiable cheaply, and gold is not. And that is a very big story. And yet, nothing in the markets yet. Okay, that's cool. We're used to things happening and it taking months for it to get digested. What's the second story? Elon is making claims that the Social Security database is completely foobarred, and there is an enormous amount of fraud going on, just absolutely enormous. What has he said we should be doing with all of these spending programs? Putting them on the blockchain. Whether that's good for Bitcoin, Ethereum, whatever blockchain, it doesn't matter. But in terms of public trust, in terms of becoming a risk off versus a risk on asset, the notion that using blockchain for something so important and finding a fraud on the scale of 100 Enrons within Social Security, and how no one is talking about what the long-term implication of that is mind-boggling to me. I'm here out in Mammoth Mountain. We're skiing and I'm enjoying myself. I'm reading these stories and I'm thinking, why is no one talking about this? This is a big, big deal. The third story that is huge for Bitcoin and will ultimately be good for crypto is we're finally seeing the meme coin implosion, the thing that we have wanted for a long time. So when Mike says there's 11.1 million cryptos, it's like, yeah, that's right, because we haven't punished anybody for doing shit that if they were doing it in a security, they would get punished for in any major jurisdiction. And that's going to happen. What happened in Argentina, and your newsletter lays it out really well for those who don't know. Crypto is Macro Now is Noelle's newsletter. She did a phenomenal. She will not promote herself, but I will promote her. I was one of the first subscribers, I think. And
love you, Dave.
I read it religiously, and she did a good job of pointing this out. But basically, what goes on with sniping in meme coins is no different. It is literally the same with modern technology as the shit that happened in boiler rooms back, and they still happen in boiler rooms, but happen in boiler rooms in securities back in the early 2000s. We all saw The Wolf of Wall Street because it was a cool movie and people like Margot Robbie, etc. But the fact is this stuff happens, and there are people who would do this for a living. Now, the internet and the global scale of it has made this much larger. Between the Trump and Melania sniping and now the Libra sniping, what is sniping? Sniping are insiders front running the rest of the world and then dumping on them. There is no person who is serious who believes that shouldn't be considered fraud and punishable by law in every jurisdiction that it happens. I don't know of one who thinks
Yeah,
that should
and
be
the
legal.
scale at which it's happening, as you pointed out, is the difference. I
Now,
mean, just
now
last
here's
week.
the scale's huge, but I just want to just let me finish and then you can go off.
Yeah.
What is one of the big things that changed on November 5th? Instead of having an administration that basically said, sure, do memes, we don't care. Just don't do anything serious and we'll let you go. We now have an actual crypto czar. We have an actual infrastructure. We now have Paul Atkins and Brian Kintens getting ready to take the reins at the SEC and CFTC, who all agree with the words I just said. The people who are running crypto policy in the United States all agree that this shit should stop and we should have a reasonable principles-based way of regulating this stuff. Now, it's going to take time, but these examples are going to be incredibly helpful to make it obvious. Okay, now you should talk about the scale. Why is it so obvious?
You hit the nail on the head there when you say this should be regulated. But just last week, ภิrst, the head of the crypto committee on the SEC, said that no, meme coins are not part of our purview. They're not part of our box. And yes, obviously they're not. And I myself have said in the past, no, meme coins should not be regulated. They're like gambling. But I think this weekend, even those of us who thought leave meme coins alone have said enough. This is enough. This is fraud. This has to stop.
Could I just interrupt you really quickly? It is gambling, and gambling is fine. Yes. Can you go to Las Vegas? Can you go to Atlantic City? Can you go to a casino where the casino is legally allowed to weight the dice, have mechanics operating at the blackjack table? For those who don't know, mechanic is someone who can like deal bottoms or seconds and cause winners and losers, or fix the roulette wheel so as to make people lose more than they win. Exactly. In every jurisdiction, gambling is regulated, and so it may not be the SEC. I don't think it should be the SEC, but it doesn't mean it should be nobody, and that's the point.
And what I'm excited about is the possibility, which is higher now than it has ever been in the past, that now we actually do get comprehensive crypto rules, not bucketing the assets into pre-established buckets, which were set up 100 years ago, creating entirely new definitions and hopefully maybe creating an entirely new division, entirely new team to give this asset class its due, not trying to convince us that tokenized securities are the same as traditional securities and not trying to convince us that meme coins don't need some rules around them. Insider trading is fraud, and sniping is a type of fraud as well. So, and crypto and casinos do have rules. So I think this weekend did change the narrative a lot. Once we do start getting regulation, then, to Mike's point, we will see most of those crypto tokens disappear. We will continue to see froth. We will continue to see innovation. That's just simply human spirit. But they will be cleaner and it will be better trusted, and the institutions will be more comfortable, especially if we do start to get deeper institutional grade services, as we saw last week as well. Reports that Citi and State Street are now working on crypto custody. BNY are already doing that. They're probably going to ramp up the marketing of that. And that is one of the catalysts, I think, that will bring the big institutions into the crypto market. And to Lawrence's point, they're probably going to start at Bitcoin because it's the deepest, it's the one with the most off-ramps, and it is the only one that is clearly not a security. Lawrence, do you want to take it?
Yeah, no, I just agree. I mean, I think it's sad, and my book talks about this. I think it's sad how much crypto and the Sam Bankman-Fried actors and others like him. I mean, now we know that President Malay is one of them. Have distorted what Dave and I understand to be, an incredible technological innovation, which is what Bitcoin is. Bitcoin, they solved the Byzantine generals problem. It was a math problem that couldn't be solved for years. And they solved it. And so they created legitimate digital scarcity. So it's kind of, there's money pre-Bitcoin and money post-Bitcoin. I mean, until the Wright brothers flew, humans didn't fly. Now we fly. And that's really the kind of level of development this is. And sadly, there's nothing else like Bitcoin. All these other coins are, proof of stake, not proof of work. And so, they're just gambling tokens, and they confuse people, and it really, they hurt Bitcoin a lot, in my opinion. And they should be in my opinion, they should be heavily regulated or shut down. I mean, I suppose it is legal in this country to gamble, and we do have a lottery and all that. I don't think those are particularly great activities, but Dave's point is fair, that if you're going to do that, at least make the rules fair, so that, you know, you can't just obviously, you know, fraud people. And, you know, to that point, look at our new president, who kind of immediately being inaugurated, you know, launched his own coin and then had his wife launch a coin. I mean, it was just so sad. I was just so disappointed in that behavior. So,
I mean, it's important to understand what people are. And look, I've been listening, and it's funny. I think the most interesting thing about the meme economy, when I said we may finally be seeing what we've seen, is arguably the human being who expressed the bull case for meme coins better than anyone was Rand Munier. And I don't know, I'm not sure how I know Rand. I don't know how he pronounces his name. I'm sorry if I'm butchering it. But, you know, he talked about for years, you know, you build a community and then you can eventually monetize the community and you get all the eyeballs together and, you know, et cetera, et cetera. That's fine. You know, whatever. I mean, I've always kind of shrugged my shoulders at this. And, you know, I think the things that are interesting and bright and shiny and new, hell, I'm not going to lie. I got involved in one meme coin. I think it's kind of cool, but it's, you know, it depends on what kind of community you're in. It's called Sparky Token, because it's about an AI, a roboticized dog, as opposed to all these, you know, whatever dogs. Did I put anything
Not
serious
investment
in it?
advice, right?
No. And did I put any serious money into it? No, of course not.
You're killing me.
But my point is, it's something to, you know, if you want to build a community, you want to get eyeballs. We have an attention economy. We have people who have the attention span of hummingbirds out there. You know, it's like the things that are actually going on, fundamental things that are happening, are really important, right? You know, I talked about two of the three of them. The third one is what's going on vis-a-vis freedom of speech, which is, if anyone's been following my X account, I've always been, it's been in my profile since I started it. Right. You know, I'm a free speech maximalist. I think it's really important. You know, we literally had an anchor at 60 Minutes say the single dumbest thing that any news person has ever said in the history of television broadcast journalism. And people are like kind of shrugging their shoulders at it. I mean, we had a woman who said that Germany used, and this is relevant to this for a lot. And I'll get to it. But she literally said that Germany, you know, committed genocide because of freedom of speech.
Weaponization of free speech.
It literally ignoring the fact that the very first thing that Hitler did in 1933 was ban free speech and made it illegal to criticize his government, because Joseph Goebbels, which was the propaganda minister, said, if we can't get public opinion behind us, people are not going to be willing to, you know, do the things that we're going to ask them to do. It literally the opposite. Free speech is the one thing that stops genocides like this from happening. In every single case of genocide, in every one throughout human history, it's always been based upon scapegoating and blaming and getting the population behind the genocide. And yet we have this. Now, why does this matter? Because freedom and freedom of speech is literally one of the core tenets in Bitcoin. How many times have you heard Bitcoin as speech from people saying why it needs to be protected, why you shouldn't be able to ban it, etc.? And so you're seeing the last gasps of the old institutions who are trying to stop a freedom economy from taking root. And I think this time, with the Vice President of the United States gave one of the great expositions of the importance of freedom of speech that I've seen. I mean, yeah, you know, the Germans are not very happy about it, because within days they were invading people and literally putting them in jail for posting memes or criticisms of the German government. You know, what does that sound like? You know, I'm going to be, you will see me be, you know, and I will engage with anybody who wants to discuss this, but it matters for crypto. I mean, you mentioned the lottery, Larry. You like Lawrence better than Larry, right? Yeah. Lawrence, you mentioned the lotteries. But lotteries are state-used. Governments use lotteries as a tax on the poor to raise money, because the payouts are so bad. I mean, come on, at least when a charity does a 50-50 drawing, you know half the profits are going to the state. People use lotteries to do that. What are meme coins at its core? What are people investing in meme coins for? They're trying to buy lottery tickets. They're trying to buy the next Shiba Inu. And to that degree, the entire category of that, which is what I was asking before the show, matters. So when you look at 11 million cryptos, okay, how many of them are real companies? Probably less than 1,000. The rest of them are, quote, projects. And what are those projects? They're lottery tickets. And should people be allowed to try to make them? Sure, but understand what they are. Anyway, so this is a rambling answer there, because there's a lot of stuff in the middle of all of this.
I want to get Mike's take on something, on a narrative that's related. I mean, we've lived through the meme stock craze, and the meme token, the meme coin craze is not totally dissimilar and indicative of a certain amount of froth. And let's face it, financial conditions have been loose. We then, that got wiped out while it did attract basically all of the attention. But then did we get back to fundamentals in the stock market when that changed? Will we see something similar in crypto?
Well, that's the problem I like. And Dave, appreciate him pushing back on me. This is so important we have this discourse. Is crypto, on a broad basis, we all can agree is a leveraged version of beta. And the question is Bitcoin. It still trades 3 times the volatility of gold and 3 times the volatility of the S&P 500. And we haven't seen the S&P 500 print its 200-day moving average since October of 2023. It's going to do that this year. Blame me if I'm wrong. And when it does that, I fully expect the whole crypto market's going to get clobbered. Bitcoin might not get down as much, but we have not even started the purge. Shiba Inu and Doge and most of those 11 million cryptos have to lop off zeros. We've seen this happen before. Those of us who traded things back in 1999, it's happened. It's just way overdue. This is just silly, massive speculation, and it's pumped up, and it's melting every day now. That's my point. This is a process that's happening despite the S&P 5 making new highs. And Larry pointed out how we know what's happening in earnings. They're tilting lower for equities. We know it's borrowed time. Everybody gets it. Even President Trump, and he gets it. He's got great advice from Mr. Besant. He's a trader. Traders get this. You don't want to buy when everybody's saying buy. That's what's happening when it's super expensive. And this is what got me out of the trading pits 30 years ago, is when I pointed out just extremes. And this is where we are right now. So I think based on that too is, I think Bitcoin meets the major threshold at $100,000. And now that all the mainstream saying to buy it, and all the insiders who did buy it when they figured it out 10 years ago are saying, thank you very much. But now the mainstream is buying, you got to be very careful. And it's just human nature to try to jump on board and buy things like Shiba Inu that have, 0.000, and it goes to 1 cent, you make a killing. This is extreme stuff. This is as bad as the .com bubble. And that's why I'm tilting over to gold. But even gold's getting expensive, near $3,000. So to me, the macro, and you see in commodities, is everything's tilting that way. And that's why I think that you see it from Besant and Trump. I think they're going to have a great trade in getting that 10-year note yield to go lower. And part of the key thing, they'll make that go lower. So I'm going to just piggyback on this is Larry, you mentioned 140 Bitcoin. 140 Bitcoin this year implies that we might add another $10 trillion in U.S. stock market capitalization, unless you're expecting complete divergence, meaning that correlation we've had forever to go reverse. I mean, that might work. Well, good luck with that one. That also means more Fed tightening, more inflation, more wealth effect. That's why the Fed stopped. One of the reasons they stopped easing. Or would say we get a normal correction, Bitcoin, to say it drops the same amount, drops to 60,000. Not a big deal. We're just there a few months ago. That brings the Fed back in. That probably means a little bit of correction in the stock market, which we're way overdue for. Brings Fed easing back on. You see the bent here? Higher Bitcoin's the problem. It means more speculative excesses, more inflation. Fed's got to tighten.
There's no doubt there's correlation there, Mike. I don't disagree with you at all. And I think both of those prices are very much in the realm of possibility. The thing you said that really resonated with me, because we're older, we've all been through these markets and all, and I was very active in the 2000. This feels very much like March of 2000 to me. I mean, I think we are really, I don't know if it does, I see you nodding. I mean, it just feels to me like we're building a top here. And it was interesting when that bubble burst, it took a little while for it to get momentum. I mean, kind of all of 2000, the market chopped around, up, down, up, down, up, down. I mean, the real speculative stuff started blowing up, but it wasn't until, I was short things. It wasn't until late 2000 and then 2001, look out. I mean, the bottom just fell out. And that's kind of how I feel about these markets right here. But to be fair and to criticize myself, I felt that way probably for a year or so. So I might be too early.
Yeah, I think. I'm sorry. Well, look, there's 2 points there. First one, 2000 was the March 2000, mass NASDAQ sell-off that got triggered from tax. People who had all those taxable gains had to sell, and there wasn't a buyer because there was a liquidity to meet that. And then by August, it had rallied back to recover all of those, and then the slide started, and it was more gentle. Yeah, there was some stocks down, and then we all know what happened in 2001. And we all know that the proximate cause for the real depth of that market was the Twin Towers, et cetera, et cetera. We know what happened, the idiocy of going to Iraq. We could go down that rabbit hole. But the most important thing you just said, Lawrence, which is really, really important, is that the market bifurcated. And yes, Amazon and Cisco and other high flyers got absolutely annihilated down. Amazon down 90%. And people remember this stuff, right? Yeah. Yet at the same time, thousands, and I mean literally thousands, of OTC stocks and small cap NASDAQ stocks got wiped out to zero. Right. Meanwhile, within 10 years, Amazon was worth 10 to actually 100x of where it was at the bottom. I know. And the entirety of the internet sector was up a lot. People tend to remember these things. So Bitcoin, I will tell you, I believe is 90+% undervalued right now with exact monetary conditions relative to gold and everything else. And you don't have to see that. If it were to drop 90%, it would be 100 times undervalued. There is a lot of money, a lot more money than is necessary to keep Bitcoin at these prices. Look, who agree with me that it's 90% undervalued right now. Well, and in a world where markets do implode like that, liquidity is going to be injected in like a friggin' fire hose. Which is what Mike always talks about. Yeah. That's the point.
Well, where's that money coming from? That's my point. Is we're so addicted to this U.S. stock market going up. And I point out last year that $12 trillion is the most in the history of mankind of wealth creation. Why is retail sales dipping that environment and CPI high? We've reached an apex. Yeah, market bubbles can get big, but you got to be careful. And just these Trump coins and Milana coins, and just what happened to copper last week. The bell rang in copper that you should sell. That's from a commodity guy. Yeah, I've been stopped out before, but that's what I'm seeing.
So let's try to keep things on a very simple playing field here, right? If the argument is that the stock market is going to implode, and it doesn't do that. I mean, it's not, we've outlawed crashes, right? Right. The markets will close. There'll
permanently
be
high plateau.
No, we haven't outlawed falling, but it's not going to drop 90% in a day. We saw anyone who lived through 2008 knows exactly what will happen. You will have massive bazookas of liquidity being talked about. The plunge protection team will get together. There will be all sorts of things will happen. Exactly. Ultimately, will they succeed? No. If markets are going to find a new level, yeah, we could see a major correction in the market. Absolutely. But along the way, certain things are going to change. I always point out, Mike, and you always have to admit that there was a delay and a lag. But in the Great Depression, or in the mid-30s, home stake mining, which was the proxy for gold, and the only proxy for gold that you could possibly have, went up, dramatically up, 10x. When the stock market was getting crushed. Yeah. That Bitcoin, and I've said this before, Bitcoin's going to be...
Let's look at the 2000 example. So if Bitcoin is digital gold, in 2000, the stock market, basically in the next 2 years, it lost 55% of its value. That kicked off the bull market in gold. Gold was at 250 at the time. And in the next 2 years, it went to 500 or 600, on its way to 1900. So, gold and stocks are counter-cyclical. I mean, there's a lot of data to prove that they move inversely, and so, when the stock market is healthy and credit's expanding healthy and there's no monetary debasement, stocks win, gold loses. When the stock market's blowing apart and there's a lot of monetary debasement, witness what you just alluded to, Dave, they're going to come in and do a big print. Gold takes off like a scalded dog. And so I think, Mike, one of the things you got to factor in is if Bitcoin is now digital gold and we have a stock downturn with a lot of printing, Dave's going to be right.
But here's the key thing, Lawrence. It's not digital gold yet.
It is.
But there are a ton of people that we've been seeing for 8 months, and we're seeing it accelerate now, a rotation from people who buy Bitcoin and sell Bitcoin on massive leverage. I mean, 100x leverage, whatever, nonsense, to people who are accumulating it and holding it because they think it's 90% undervalued relative to gold. And those same people generally are more likely to be investing in gold alongside it than saying, no. I mean, you find me a Bitcoiner who is at our age that doesn't own gold also. And I would say that'd be the first one I've ever found.
Yeah, there aren't many of them. Yeah, I
Let me
agree.
Yeah, but
piggyback on that.
that's our age, and the big wave of investors coming in
We're old.
are younger. And
I got to
But no,
piggyback
they're
on that.
not.
One thing our discussion's missing, I'm not pointing out stock market crashes. I'm just pointing out relative valuations historically. We all know it's worked that way. The difference with the last corrections is we've learned the lesson of too much liquidity and inflation it created. And that's part of what helped Mr. Trump get elected, because inflation helps people like us, anybody who owns assets and has a home and stocks. It hurts your average person, of 55% of the wage earners in this country. And that we've learned that. Also, what tilted him also was figuring out Bitcoin. The key thing that's pointed out here is Lawrence pointed out, gold, we all know this, has zero correlation to the stock market historically. Yes, if it crashes, it'll go down initially, but we know cryptos have a very high correlation to equities. That's my point is, let's get past that hump.
Absolutely.
My point is right now, as far as a relative value risk assets on a global basis, US is the most expensive ever, US stocks. Bitcoin is the most expensive ever relative to many other things. It's 100,000 threshold. I agree with that. And then we have that massive amount of competition supply. Remember, you don't have that in precious metals. There's only 3 other ones: silver, platinum, and palladium. In cryptos, there's gazillions. And then there's this massive issue of what's happening in the rest of the world. Just look at their sovereign bond yields. The average of the 5-year of the 5 top countries in the world by GDP, their 10-year note yields, starting with China, are about 130 basis points less than the US. That's signs of a problem. That includes India. Before the financial crisis, they were about 100 basis points above the US. So what's the tilt here? When we have a little bit of normalization, the next big trade, I think, will be those treasury bonds. And the key thing you're missing about pumping and dumping, we've learned that lesson. When it comes time to do that, everybody can say, well, you did that last time and you ruined my life. The total CPI is up maybe 30% since end of 2019. Your average wage earner is not making 30% more.
Yeah, there's no doubt.
Absolutely.
I want to pull on the thread of, will the Fed come in and just print money? Should we get that correction we're waiting for? Will it? I mean, that's the easy thing to do. But then again, most of the current narrative, especially from the current administration, is that is precisely what led to part of the problem, certainly in the heartland. It boosted assets, it boosted stock markets, it didn't actually help people. And this comes down to a question I want to throw back at you, Mike. We've been taught, I certainly was taught in school, that the stock market is not the economy. Has that changed?
So that's the key thing I enjoy about this, the lessons of Einstein. The questions are the same, the answers have changed. Particularly in crude oil, I really enjoyed pointing it out when it pumped above 100 last couple of years ago. This is the seeds for it to go back to 50. Now it's still heading that way because the answers have changed. And that's the big difference now is we've learned the lesson of too much liquidity and inflation. We've got that. Check mark. It's the biggest inflation since most of us since the 70s, which most of us were really young. It's just the macro now. It's at that point now. And we all know it's just the complete, every time we have human nature, complete optimism for this new president, just get a little bit of tilt back to normalization. The Europeans are pointing it out, but the rest of the world facing these. Now, these are tariff things that I remember speaking with clients 30 years ago. And here was a quote I used to use. This is the macro opening, where we used to say, yeah, everybody in the world says they want free trade as long as they can run a surplus with the US. It's impossible to have free trade with the rest of the world because we're the demand pool economy, the greatest, we can't have the currency adjustment, and we provide security. There has to be higher tariffs than anybody else coming to the US. It's just to even it out. And that's happening. And my point is the tilt is already that way. As I point out in bond yields, the rest of the world heading towards a deflationary recession. Will they print? They have to, but they also have to pay for their own security now. The US has been, and I have a lot of skin in the game in the military, and I don't want my kids, the people I know, dying overseas. And most Americans get that now, the rest of the world. So this is my point is, it's not Smoot-Hawley, it's worse. It's completely defendable, and the world has become accustomed to exporting to US. That trade's over.
And yet at the same time, we're seeing inflation. Yeah.
There are 2 points here. Number one, Smoot-Hawley was the US at the time of Smoot-Hawley was the net exporter, the massive net exporter. And so the effects of tariffs would be different. Number 2, and we could go down that rabbit hole. Number 2, Trump's tariff policy that is starting to emerge looks a hell of a lot more rational than certain people who,
they are
on this thing, have said. What is the emerging tariff policy? Use tariffs as a threat for geopolitical things, which has been successful, things like curbing fentanyl, and go to reciprocal tariffs. pointing out where people are going back to fundamental fairness. Now, what will that do? That will tilt and cause there will be lots of issues to that, but it won't be Smoot-Hawley. It's not going to be global depression, sort of things. And I think that's but the most important point when we talk about inflation is we have and you said it, Scott Bessent is a trader. Inflation, people all the economists, and I love making fun of stupid economists, make this argument that we managed to have monetary printing, huge monetary printing without inflation. They're absolutely wrong. We had huge monetary printing and we channeled inflation toward assets as opposed to toward consumer goods by prioritizing capital over labor. I'll get all Thomas Piketty on them because he's right in what he's saying. And by doing things such as making it more overly cheap, effectively, to invest in technology and automation, overly cheap to make the investments to do outsourcing. Outsourcing is not cheap. It's not free. It costs money for companies to set up outsourcing to do that. And so what we did is we prioritized something that was guaranteed to increase the wealth gap. And so that massive 30% print, what was that because? That was because both Trump and then Biden on steroids decided to put money in the hands of the average person. Right. So, the actual stimulus checks and all that other stuff. They broke the taboo. They literally changed the flow of money from assets to consumers. And that triggered 30% inflation. And they realized that mistake. People have figured it out and they're not doing it again. And now we're in a situation where they're trying to get the genie back in the bottle. Will they succeed? Yeah. Well, if you believe trueflation, they're starting to succeed. Right. So that if that's true and monetary printing is going to continue to happen, then shorting asset price based on the denominator of the money probably isn't the smart move.
So let me piggyback on that.
And that's really the point.
We just one quote and we'll piggyback is from Robert Lighthizer book, No Trade is Free. The U.S. has been exporting wealth to the rest of the world for decades. That's stopping. That's my point, is it's shifting that backwards. And this is not my view. This is Robert Lighthizer. That the largest military in the world is built in U.S. dollars, and it's not in the U.S. This is what's focusing. I would behoove people not to underestimate the motivation of President Trump right now. By the way, he's got less than 4 years left, and he's done. He's going to make sure it happens soon.
And depending on what happens in the midterms, maybe even less, just, who knows. But,
definitely.
Dave, coming back to something you said, and this was something I was going to throw your way, we do have, going back to US Main Street, inflation expectations are blowing out, not only on the surveys, but also in the tips yield. Inflation expectations are blowing out. Is that tariffs expectations, or is that money printing expectations, or is that just people are scared?
Well, it's people are scared, but I mean, you have the vice president has said it very eloquently that we need to bring things back to the United States. Well, what does that mean? Well, right now, building in the United States is dramatically more expensive than in a lot of these other countries. And it's not just wages, it's, environmental laws, it's oceans of red tape. And, we could go chapter and verse. Look at what's happening in California. I mean, people aren't going to get back into those houses for a year. And that's with Newsom claiming he's going to cut red tape. I mean, we've made it almost impossible to build factories at anything close to the cost that it's done in Mexico or China. And the wages are only 20% of that. And everyone always looks at the wages. You're looking at the 20%, unless that changes. Now, will it change? Well, that's the promise. We'll see. But if I'm an average American, I'm taking a survey. Do I believe that they're actually going to fix something that's so structural? Look at the screaming that's going on from almost half of the politicians in Washington about doing things to actually stop fraud, waste, and abuse. Look at the screaming. I mean, we knew this was going to happen, but this is actually the debate, the fight, because if we are capable of reforming our system to the point where we're going into politics isn't a way to get rich, which, by the way, has been the truth in every single command and control economy ever. But when we look down at our own, look at the average wealth in the Senate and the House. It's not pretty, right? It really isn't beautiful. And you see why. We're now hearing the stories. We're seeing the truth that money is getting sent around to their families, right? It's stuff that we're seeing.
No, let me take this inflation thing a little bit. Mike earlier mentioned that there might be a trade in some of these bonds because we've got a little bit of a deflationary impulse here. And I don't disagree with that. But I think that, we had 40 years of deflation based on the China price and a lot of other things that happened from, Volcker to the present. And when COVID happened, that trend got snapped. And it's very hard to turn it around. And we now, in my view, we now live in a secularly inflationary world. And I'll just cite a few examples. The longshoremen went out last fall and struck on, their wages. They got a 6-year deal for 10% a year, up 60% over 6 years. 10% is a long ways away from the Fed's 2% target. The DBA agricultural ETF last year was up 28% for the year. By the way, that's why your grocery bill hurts so much. I mean, and as we all know, they have hedonics and a lot of other things they do to cook the inflation numbers. I personally had a house where the insurance went up 100% year over year, the homeowner's insurance. My automobile insurance went up 33% last year. I mean, the notion that inflation is kind of really running at what they tell us, this 2 or 3%, that's just a fantasy. I mean, we live in an inflationary world now. Oh, and by the way, nobody's talking about it, but tariffs are inflationary, right? So, in an inflationary world, what do you not want to own? I mean, with all due respect to Mike, you might want to own bonds for a trade, but you sure don't want to own them long term, right? And you probably don't want to own stocks, because in the 70s, stocks did pretty poorly because, you're not able to necessarily have the pricing power to maintain your margins. And what you want to own are things that can't be debased. And, so there we go, gold and Bitcoin, right?
So Bitcoin the competition is massive. So I'll give you the deflationary tilt. First of all, profits. Let's look at the number one reason that U.S. corporations, which are profit maximalists, have done, why they reshored and why did we created all this import markets for profits? What's going to get hit hard? What are expectations for way high profits? So let's give an example of that. Right now, our trade deficit, which you said is going to be, tariffs are inflationary short term. So maybe it's about $1 trillion. Let's say you add 20% on that, that's $200 billion. Not big deal. If the stock market drops 10%, which used to be normal, that's $6 trillion. That's what, 20% of GDP? I mean, that's massive deflation. Look at the price of unleaded gas. The number one measure of two measures of consumer sentiment over time is gas prices going up or down, and stock market prices going up or down. Gas prices right now, $3.16 on a national basis, was first traded in 2007. So yes, you're seeing some pockets of inflation on the back of the number one factor, the big pump from COVID. But I'll mention two books: The Price of Tomorrow by Jeff Booth, a big Bitcoiner, massive deflationary forces from these little things called technology. I see it every day. The Price of Time by Edward Chancellor, pointing out deflation always comes in the back of massive pumps and liquidity. What's happening in China right now, the property crisis, severe deflation. So I think the key thing you're pointing out is anecdotal things. It's the max. It's all dependent on the stock market going up.
Right.
We have to see that tide going out. So that's my point is, this is the next big trade is the U.S. catching up to China's bond yields. We've seen it happen in Japan. It's just happening globally. And the tariffs are part of that tilt. That's my point is I think Bassett and Trump get it. You can't just have the stock market go straight up over time. But if you get that correction over with early, to me, I'm talking about a trade. But also, there's one other thing I want to mention is we have the world's largest employer. The U.S. government is cutting workforce like we've never seen before. Now, we knew what Trump and Elon were going to do: go fast, move fast, and break things. I love to criticize them, like criticizing the president for trying to end killing in the war. I mean, at least he's trying. We haven't come to grips. At least he's trying to stop the death. And I love to criticize him, but it's great. I completely defend what he's doing. But we are purging this massive employer. It's just getting started in this deflation. And it always comes at peaks when people are worried about inflation, is when you get the opposite.
I hear you, Mike, and I don't disagree. And Jeff Booth is great, and I've read Chancellor's book as well. And we live in a deflationary world, but we've got a monetary system that actually requires inflation, or else it blows up.
It has to expand, and we learned that.
It's like a shark. It has to swim and expand, and so fine.
And it's a tool to bring down the debt relative to GDP.
Right. Fine. So what you're talking about occurs. The natural deflation takes place, and then guess what? The base level of money can't support the debt structure, and guess what? Here comes another big print. Right? I mean, we know that the third Fed mandate is financial stability. And so we know there's a Fed put underneath the stock market. So the stock market falls 30% unemployment starts to spike. I mean, we're going to be back to QE and 𝗟𝗕𝗔𝗡𝗚, so fast your head will spin, right?
So if the stock market falls 30%, what happens to Bitcoin? My point is, we're not missing, but
I don't disagree that Bitcoin goes down in that instance. I don't disagree with that briefly.
I look at it as a trader. There's going to be a great trade here. That might be the time to buy risk assets, but right now isn't.
I want to start because we haven't got much time left. I want to start wrapping this up by bringing this to the uncertainty that is, of course, underlying all of these conversations. We have obviously no idea how successful Trump and Doge team are going to be in getting down the deficit. We have no idea what's going to be happening on the military spending front, and we don't even know if we're going to have a functioning government after March the 14th, which is when the debt conversations, I think that's the next deadline for them to reach an agreement on. What do you guys think is going to happen there? Because that affects a lot. Not just the regulation that we know we need for crypto, but it also affects the spending.
It's such political theater. I mean, come on. I mean, between Lawrence and I are both going to shake our heads and say there is only one direction the debt goes. That's up. Now, the only thing that can change that is two things, and they both have to happen. One, what they're doing with Doge and everything else, finding all this stuff, downsizing government, and decreasing, what we're actively spending on to, buy us a little bit of time, and two, cutting the bureaucracy to encourage hyper growth, which may show up in the current stock market. It may be new companies, you can talk about where it is. It's literally the only way out long term. As far as March is concerned, it's really a question of, can the Republicans hold their shit together to get some of this stuff passed, or are we going to blow up in a paroxysm of screaming matches again? I mean, I don't think I've ever seen more absolute lies being screamed at by people ever. I've never seen this. I mean, things that are factually untrue, like, dumb shit, like getting rid of the Department of Education to lend the Pell Grants. No, that's not the proposal. It's to move the Pell Grants under the Treasury. I mean, you can go through a whole litany of these things. So many things, from literally the ranking member, the Speaker of the House if the Democrats win the Congress, Hakeem Jeffries, literally lying to people. I mean, but not in a subtle way. We're seeing, all of them do this. So, and yet now we have this big theater that will come up in March. The question is, will the Republicans be able to pass something before that? Because what do they want to do? They want to make it a $4 trillion increase so that they don't have to fucking worry about this for the next 2 years and can get on with business. What does all this mean? It means more liquidity being pumped into the economy. Full stop.
I see Mike smiling. I mean, we've seen this movie. We know what's going to happen. They're going to pass a debt increase. That's all a rounding error, and it's all very predictable. What will be interesting to see is if Bessent goes for a gold reset, which is kind of being kicked around and very much possible in my view, and something they probably need to do. They've got to figure out ways to get more liquidity into the system, and he's as much as said that he wants to liquefy the asset side of the balance sheet. And the only thing that's really liquid there is the gold and silver that they hold. So. I think that's going to be the story of the next 6 months. And
can I make one other point, Lawrence? I'm curious what you think about that. So we all know that as far as the U.S. government balance sheet, the single largest landholder in the United States is the U.S. government. And I started to see it getting floated. Talk about the ultimate rug pull on land.
If they start selling land, it's possible. I don't know. My gut is the Defense Department's not going to let them. I think they think a lot of that's strategic stuff, but who knows?
So to wrap it all up, there's a lot of tension. There's a lot of people screaming Bitcoin could shoot up to 150, or it could come crashing down to 60. It very much depends what the stock market's going to do. We don't really know. In terms of that, let's a quick fire round here, seconds each, because we've got 3 minutes left. Catalysts. Mike, what catalyst do you think will start the move going that you're waiting for?
What's always happened in history is risk assets just get too expensive and they mean revert. And it's a question of timing. I feel like I have to point out from my colleague Gina Martin Adams, she's pointing one thing about the U.S. stock market rally, it has earnings. We remember in the bubble in 2000, it didn't have earnings, but cryptos don't have earnings. So to me, this is very much a dot-com bubble levels in cryptos. We need to lop off zeros, the catalyst. I don't know what'll be next, but I did point out we are the world's largest employers purging, its biggest purge probably in history. And this everything cutting out that waste means all that excess spending is being pulled from the economy. Remember what we have, like 6 to 7% of GDP needs to be contracted at least a little bit. And that's my point. As I look at it, I'm just looking for the next to make major decision differences. Where I might put out a bullish Bitcoin comment or may put out a bullish gold comment. I'm not gold. I'm bullish gold. A bullish copper or a bullish crude oil. Typically, you need a lower price cure, and I think we're still at the risk of Bitcoin's just too expensive. Risk assets are just too expensive. And as far as the catalyst, I'm waiting. But right now, I think Bitcoin might be the leading indicator for everything. It needs to stay above 100 grand. If it doesn't, everything trickles down.
It's definitely a liquidity widget. I think Mike makes a very good point that a lot of people have not focused on, which is if Doge is successful, that's very recessionary. You know what I mean?
Yeah, that's true.
You cut expenses and, it shows up somewhere else, right?
We're seeing that. I mean, I read an article this morning about house prices in the Washington, D.C. area. It's just, just frightening. And the house price, the mortgages are held on bank balance sheets. Again, frightening. Lawrence, catalyst, seconds.
I think it's going to be very interesting to watch what the Treasury does with both the term maturities on the debt they have to roll over. I mean, very few people have focused on it. We haven't talked about it. They've got to roll over between $7 and $10 trillion of the debt this year. And so Mike is all over this because he's a bond guy. I mean, oh my God. I mean, this is going to, how the hell are they going to do that? I mean, I think the SLR change is one thing they'll do. I think they're probably using the tariffs as a club to try and get foreigners to buy the bonds. And then they'll say, hey, we'll give you a swap line if you need it. I mean, they've got to, to me, the Treasury market and what Bessent decides to do, revaluing the gold, etc. I mean, it's fascinating. And to me, I think it's going to be the biggest catalyst to what's going to happen.
Watch the auctions then, right?
Watch
Dave,
the auctions.
Dave, what's your favorite catalyst?
My favorite catalyst is the absolute certainty that all of Wall Street is going to be unleashed to offer crypto and, most importantly, Bitcoin and potentially Ethereum and other trading services, allowing the unlock to finally happen where it gets its share of all wealth. And then the stories start about what does it actually mean. And so all this delinking stuff, trading at a 90% discount, these are very powerful narratives. At the same time, money printing, I believe that's why the back half of this year, and I think it'll probably happen sooner. I think that's why you'll see that rally. I think the trade is if you figure out which are the companies that can't take advantage of this or cannot, as Mike puts it, keep their margins because they don't have the ability to do so. The trade is going to be long Bitcoin and short that and a bunch of other crap within the crypto sphere. I think there are some winners in the crypto sphere that will take place, but I do think that Bitcoin being able to be offered by the entire brokerage community in the United States, that all of these things is a very, very big deal. Because still, when you ask people, you mention Bitcoin to people, what do you hear? The first question, how do you invest in it? Name one other asset where the first question that you mentioned, you're asked is how do you invest in it?
So up, down, sideways, we don't know. What we do know is things have never been this interesting. Thank you all so much for watching. Thank you so much, Dave, Mike, Lawrence, for being here. Tune in again next week.